Hi there. Thanks for joining me on Rethink Real Estate. I'm on a mission to make real estate work for everyone. Real estate can help to solve climate change, can house people affordably, can create beautiful streetscapes, unify neighborhoods, and enliven cities. So I'm on a journey to find the most creative thinkers and doers out there. I'm not the only one who wants to rethink real estate. You can learn more about me at evepicker.com, or you can find me at smallchange.co, a real estate crowdfunding platform with impact real estate investment opportunities open for investment right now. And if you want to support this podcast, please join me at patreon.com/rethink real estate, where there are special opportunities for my friends and followers. Today I'm talking with Dan Miller, who co-founded Fundrise, the first real estate crowdfunding platform to emerge in the US, and which has now raised over $500 million. Those early years at Fundrise were a slog, but that hasn't stopped Dan from starting over. He's changed lanes. Sort of. In 2016, he founded Steward, an online platform which raises loan funds for sustainable farms from the crowd. In a way, it wasn't such a shift from Fundrise, which used an online funding platform to connect developers to investors. Think farmers instead of real estate developers, and loans instead of equity. How did this happen? When Dan's real estate work led him to cross paths with a local Washington, D.C. chef, and as he learned of the financial difficulties facing independent farmers that supplied his restaurant, Dan connected the dots. This generation of regenerative farmers has more opportunities than they've ever had, says Dan. The demand is exploding. They really have a chance to grow sales and revenue, but they can't get funding. So he set out to solve that problem. You'll want to listen in to learn more. If you'd like to join me in my quest to rethink real estate, there are two simple things you can do. Share this podcast or go to patreon.com/rethinkrealestate to learn about special opportunities for my friends and followers, and subscribe if you can. Hello, Dan. I'm so happy to talk to you today.
I'm happy to be here. Thanks, Eve.
So I have followed you since the early Fundrise days, and now you have Go Steward, a very different type of enterprise. So I wanted to start by just understanding, what is Go Steward?
Yes, so Steward is a funding platform for regenerative agriculture. I began meeting regenerative farmers in my real estate days in the past through chefs I knew. And these types of farmers, diversified, direct sale, smaller scale generally, have very little access to capital. So it's meant to be a platform that lets farmers raise funding and lets individuals provide capital to them that they can't find otherwise.
So, but why did you start it?
I started in 2016. There was a well-known chef in the DC area that I had been working with from real estate projects there. And through him, I started to meet, all these farmers growing amazing products, with great stories, selling them at well-known restaurants and farmers markets. And then in those conversations, it was clear that none of them had access to capital, which was surprising because they're selling products that everyone wants. You think they'd be able to get access to funds. And this was in the early days of when I was working on Fundrise. So 2000, around when Fundrise was launched was when I started to meet some of these farmers. So I shelved the idea for a bunch of years, and then it kind of kept coming back to me. And I eventually read the Wendell Berry, The Unsettling of America, one of the kind of iconic foundational texts around agriculture and the challenges and issues of modern agriculture. And that just put me on, I would say, the path and obsession of this type of agriculture, and then the positive impacts that it has through land use and ecology and health and wellness. And you kind of, once you get into it, I find that people, they tend to not be able to stop.
So how does it actually work? How does the platform work?
So farmers come to our platform through digital ads, through referrals, through direct relationships. they apply for funding, through a traditional application process, telling the background and their experience, what products they're growing, so we can learn more about their farm. We do due diligence, we vet them. We have a farmer on our team who does the agricultural diligence, understanding their operation, their bottlenecks, their challenges, their farming practices too, to make sure they align with the principles of regenerative agriculture. And do the credit underwriting, the classic financial stuff that's not as sexy but is critical for any viability of any platform. And then the loans are put on the platform so that people are buying loan participations. They're buying slices of the loans that we were making, and then they earn the interest and return on that loan. So it's essentially a way to connect farmers who need capital and need credit with individuals, whether high worth, family offices, or small retail funders, and give them the chance to lend money to these farms.
There's always an issue with finding loans for anything that is really standard, right? And I feel like that's partly why we're in the predicament we're in. Like, banks are really focused on lending to sort of tried and true things that they know will guarantee a return for them.
And that's, I think, the broader theme of the work I've done through Fundrise or now Steward, that most funding is looking for safe and traditional and corporate and reliable. And so when you see that what businesses are able to access capital, it's the larger ones, that have a lot of assets and that are more predictable. But money needs to go to small businesses and entrepreneurs across the spectrum, whether that's in agriculture or real estate or small business. And the way that the funding system is set up is it's just not built for that. So, creating these decentralized models where smaller dollar contributors can participate and entrepreneurs can tell their story and raise funding, I think is fundamental to really unlocking more capital, which gives more opportunity to people. So I see parallels in the kind of, they're different sectors, but in the need to bring different types of funding to the end result.
Well, I wholeheartedly agree. So, in real estate, it's exactly the same problem as in business. So it's always the same old that gets funded, and that doesn't really encourage innovation and moving forward, does it? It just encourages staying where you are.
Not at all. And I think I found a lot of similarities in agriculture to real estate. The focus on credit tenants, the focus on the users of the space being well-capitalized corporate users, forces a certain type of development with, chain stores and large corporations. And similarly in agriculture, they're focusing on large commodity producers, huge operators with just tried and true, grain, corn, soy. Whereas anyone that's doing anything a little different is just not worth the effort.
Left out,
Just left
completely
out,
left
completely
out.
left out. Part by
Yeah.
design, I think, but part just because it takes more time. It's just basically harder
It
to
takes more
assess.
time. Yeah, but damn, it's so much more exciting.
Well, I can't do the cookie cutter. I have no motivation, so there's no option
No,
for
I'm not
me.
wired that way either. Like, I'm just not. What can you say? So, where did you start your operations?
So
Where were the first farms?
I
Yeah.
began in 2016, 17 working on Steward. The first farms that we funded were two urban farms in Detroit. I had left Fundrise. I had started speaking to farmers, through many different connections. And I actually found a lot of real estate people I had met, around the country. I asked them, if they knew agriculture and was connected to a lot of local farmers. So there were two urban farms in Detroit. One was called Fisheye Farms. One was called Acre Detroit. They were farming on, small lots, a tenth of an acre lot, and they were hoping to buy land from the city. The city owns 10,000 acres of vacant land, but is hesitant
Well,
to
of
sell it to
course, yeah.
farmers because I don't know what they're waiting for. And so we stepped in, provided funding for these farmers to buy 2 acres of land each. The original loans I personally provided as I was building the platform and figuring out the regulatory infrastructure. And just an example of the kind of growth and opportunity of these overlooked farms, Fisheye Farms went from 10,000 of revenue to 120,000 of revenue in 3 years since they were able to
Oh,
buy
wow.
that land. So
How much was the loan? Like, how much
that
was
was
it?
a $100,000 loan. So I mean, relatively small loan.
Relatively small.
And it shows the demand for those products. People really want to buy wholesome food and they want to connect with where their food's coming from. And so in a city like Detroit that, they're in a food desert, they have fresh food that they can sell locally and people are thrilled to do so. So I think that there's a lot of misnomers around the viability of these types of farms. The reality is they are viable, but they've been undercapitalized. It's hard to get to viability when you can't access funding, but when they are able to access funding, we see the same story of really rapid revenue growth. So, we started with urban farms in Detroit. I thought we would be a niche business. I thought most regenerative farms were funded well, and maybe urban farms and other niche farms struggled. And I soon realized that it's a global problem. Any non-traditional farm struggles with capital. And so that's kind of broadened from urban farms to really all types of farms now.
How many farms have you helped to date with loans?
Over 70 now. That's about one or two new farms a week. So it's really picked up. Just some recent farms as an example. We have a livestock ranch in Western Oregon, right near Astoria, Oregon. We have a urban farm in Detroit with a black farmer who's about to raise funding. We had an Amish dairy farmer in Pennsylvania raise funding to do value-added processing for fluid milk. We had a fisheries project, which is line-caught tuna and line-caught local fisheries that are then processed and sold direct. So I think the narrative that's similar is farmers are people that are obsessed with the quality of their product. They're obsessed with the traceability of it. They're obsessed with taking care of the natural resource, whether that's land or the watershed. And they have customers that are along for the journey, that want to support them, and they need money for equipment, infrastructure, land, operating capital. So it's fairly a simple business plan. They have demand and they need more production to meet the demand. But because they're non-traditional, they're just ignored.
So you say they have customers who want to support them. Do those customers also invest?
Yes, those customers do fund the loans. We actually have the first 20% of every loan gets funded through the network of that farmer. So they share it, at the farm stand, they share it through social media, and that gives a chance for their community to be engaged and connected to the farm. And it also provides social validation of if those people are engaged in supporting the farm, then I think it provides us confidence too that there's really a community to support them. If you have customers that love your product, you're in good shape as a farm. And those are the types of farms we support. They've established their markets, they've established their products, they know what they can produce, they know where they can sell it, and now they need to grow. And whether they're a small farm or larger farm, they have that same kind of demand that they are not unfulfilled.
So I think you've said this is not a crowdfunding platform, but this sure sounds like crowdfunding. So what's the regulatory structure that you're
Yes.
using?
So, crowdfunding in the general term of raising money online for many people. But ever since regulation crowdfunding came out, then that's kind of narrowly defined crowdfunding
Really? I don't think of it that way.
in terms of fundraising in perspective. So, yeah, so I think in broad brushstrokes, it meets the parameters of crowdfunding of raising capital online in smaller or larger amounts and people telling their story. We're providing loans, so we work under a framework of syndicated or participated loans. So Steward is a private commercial lender. We provide the loan, we're the lender of record, and then we sell loan participations to qualified basic members of our platform. There was a recent legal ruling over the summer, last summer in 2020, around commercial syndicated loans not being considered securities. So there's always been a discussion around the determination of when is a loan a security or not a security. And so under that premise, we've kind of designed our business. So basically, we're just providing credit, providing loans, and giving the people the chance to participate in those loans.
That's really fascinating. What's the typical loan size and what's the rate?
So most of the loans, I would say, as small as 10,000, average loan probably 50 to 100,000, and the largest we've done is 700,000. Larger loans tend to be for mortgage, for property purchase. The mid-size tends to be for equipment and some infrastructure, and then smaller ones are often kind of quick bursts of operating capital.
I mean, it's really sad that a farm can't get a $10,000 loan from a bank.
Well, the sad thing is it's easier to get a $10 million loan as a big soy farm than a 50 or $10,000 loan from a bank. So it's kind of this strange circumstance you've probably seen in real estate that the bigger formulaic deals can raise money and smaller deals that
That's
can't get it.
exactly what we see on small change. And yet, I mean, I really think that if you're really going to support that change in real estate and growing experience with people who've never had the opportunity before, that's exactly what has to happen. Smaller loan sizes, smaller equity needs,
You
like
need a pathway.
smaller.
Yeah, you need a pathway to
Yeah.
viability. Right now, this system's set up that only if you're inheriting large amounts of farmland can you get credit because you need big assets and big dollars. But a lot of the farmers we support didn't grow up farming. I mean, that's I think the real sea change that's happening in this type of regenerative agriculture. You know, people non-farm background, often college educated, going into farming, which certainly never happened in the past, at least not consistently. You know, how are they going to get on the ladder? How are they going to be vetted and able to support? So a 10, 25, 50K loan helps them get started, and then eventually they buy land and grow as a business. In terms of rates, most of the loans are between 5 to 8%. So I think very fair rates,
That's really reasonable.
very reasonable rates. And
That's really
we
reasonable.
found that the funders are comfortable with those. You know, 5 is secured mortgage, solid cash flow. 8 is, you know, equipment with an earlier stage business. The highest we've done is 10, which is, you know, kind of a scrappy year 1, year 2 farm where they're early in their days and they just need funding to help grow. And so that's really what we're trying to do, create a capital market for regenerative agriculture. You know, at what rates are people willing to lend the money? At what rates can farmers afford to borrow the money and connect the two, which is surprisingly uncommon in agriculture because the entirety of the market, most of the market is government funding. And so there's very little private capital market in agriculture. It's pretty much all USDA and government loans. And so what we're trying to do is create an alternative of, you know,
Yes.
private capital that's a different option for these farms.
What about vertical farms? Have you helped any vertical farms? Because that's all the rage, right?
It's all the rage. I'm skeptical of vertical farms. We've helped
Oh,
urban
interesting.
farms. We've done greenhouses, hoop houses. The thing I struggle with vertical farms as a concept is they're only needed in certain places. Generally, land is not that expensive in most places that you would need to produce vertically. And I struggle with the capital costs. You know, $1 million into some infrastructure to grow greens, you know, when you can go not too far outside the city and buy a piece of land for $10,000 and grow greens there. And so the economics of overhead of $1 million or overhead of 25,000,
It doesn't make sense to you. That's really interesting. That's really interesting.
I struggle with that as a credit provider. That you basically have, you know, the thing I've learned in agriculture is you want to keep your overhead low. You want to have as little debt to service as possible. And so loading huge infrastructure costs for the vertical ag just kind of breaks that mold. Farmers, I think, do find it frustrating that, you know, a startup in Silicon Valley that's doing vertical farming can raise $100 million, but they're doing livestock in Missouri and they can't raise 50K. And so it's just like, why do we keep throwing money into the nonsensical $1 billion thing when there's just good people out there who are doing farming the right way and just need a little bit of money to take the next step?
So, Dan, you really like to support the underdog.
Always. Whether I don't know how that developed, but I do, and I
You're a
find with
man after my
these
own heart.
and with these farmers, I mean, they're persevering, they're sacrificing, they're doing whatever they can. Most of them have off-farm jobs. One of the farms we funded in Detroit was washing dishes at the restaurant he was selling to. I mean, whatever it
Oh,
takes. And so the ability to get them more resources and help them grow, it does. It is meaningful. I find it more meaningful than my work in real estate, where not all real estate developers, I would say, have the best ethic, but these farmers are really
yeah, I agree.
values-oriented
Yeah,
people.
interesting. So, but you have to keep the doors open. How does Go Steward make money?
Yes, you do have to, and that's part of our proposition that, you know, it's a commercial platform. You're paying rates of return that are reasonable but fair to lenders. We charge a loan origination fee, so we charge roughly between 2 to 3% of the loan amount, and that's a success paid at closing of the loan. So, you know, they go through the lending process, and that fee is added to the loan balance. And then we're also working on some other revenue streams. We're providing services support to some farmers, such as bookkeeping or helping with branding a website. So I think
Oh,
over time, a lot of the kind of business functions of these farms, we could help and streamline. And then we're also providing our technology infrastructure. One of the farms now is using our software to raise a round of equity capital for their business in a private syndication. So they're using our software to do that. And we have other firms. So I think over time, there's kind of the value of this system we're building, the kind of decentralized financial platform, and then its application is to agriculture. And I think over time, there's ways to monetize both of those. But we're in our early days. I mean, we're obviously have a long way to go, but there's a lot of growth and demand and interest from both sides of the market. So I definitely see the viability. I've seen it before from Fundrise, where at the beginning you're like, how will this business ever work? But if the right market forces and trends are behind you, you can surprisingly get to scale. And I see the same thing here, where just the interest in regenerative agriculture is exploding, the kind of viability and demand for these products is exploding, and the need for alternative capital and credit is becoming more aware. So those kind of all weave together that, there's more farmers that need funding, more people who want to fund them, and the wins of ESG and climate and kind of the policy support is going in the right direction.
Interesting. So how do you hope to scale?
For us, it's just more farms. I mean, we started making loans originally, smaller, 50K, 100K. Recently, we funded a project that was 700,000. So we're now starting to work with more mid-sized farms that are, hundreds of thousands of revenue, really solid operations starting to grow. So by being able to provide more capital, we can support operations that have more capacity to grow. So I think, just expanding both sides of the market. The more farms we have, the more capital is drawn to the platform. The more capital on the platform, the more interest there is from farms. So we're seeing that, symbiotic kind of viral effect of each side of the market strengthening the overall platform, which is what you always hear about. But it's nice to see it in action, that kind of the more the business grows, the more it can offer.
Yeah, yeah. So you said you started in Detroit. Where are you lending now?
We're lending all around the country. Right now, we're U.S. focused. We've had a lot of interest from non-U.S. farms, so that's definitely on the horizon. But in terms of U.S., Oregon has been our biggest market. Our HQ is in Portland, although our team's remote. So, just amazing farmers and farmland in Oregon, really knowledgeable and thoughtful consumers, a lot of them hoping to also put their money to work in local food systems. We just made a loan to a farmer in Hudson Valley. We've funded a bunch of farms in Louisiana. So I think we're now at probably around 30 of the 50 states in the U.S. So it's by no means limited to big coastal cities. I mean, we've got farmers in all parts of the country. And the business model depends. You're closer to a city. You often have produce. If you have livestock, that tend to be farther from a city because you need more space. And it all varies. But we'll support any type of farmer, anywhere in the country and hopefully soon the world, as long as they're following the right practices and they have kind of the knowledge and experience that they need.
So do you have investors who invest across all farms?
That's what we found. That's one of the most promising aspects. We have over half of the people that have funded a farm fund another farm. And I think we found that we're building a category of, well, I've funded this one farm and now here's another farm. It's a similar story and a similar profile, maybe in a different location and a different product. But I see their challenges. I believe in them and their kind of values focus. So I think we're finding that people who want to support regenerative farms have very few options. And if they've come to support one farm, maybe they're a CSA member of a farm and they heard about the opportunity to help fund it and they have. Now they see another farm and they fund it. So we have people who funded, 10 or 15 farms even. And some are putting $10,000, $25,000 into every farm. So I think the kind of stickiness of the customer on the funding side has been very positive, because that's not always the case with platforms. Sometimes people come in and do one deal and that's the end of it. And if you can really cultivate a community, it goes a long way.
Yeah, we're actually finding the same thing. We definitely have a community of investors who come back again and again and again for particular themes. I think those people are truly impact investors. They really care about an issue like a farm. It's great. It's really great to see. So just shifting gears a little bit, the common theme in your life has been crowdfunding, at least for the last 10 years, right? You launched Fundrise, which looks more like a mutual fund now than a crowdfunding platform. And now back to sort of a very organic crowdfunding platform helping farms. What else do you think crowdfunding might be applied to that could be really successful besides real estate and farms?
Yeah, I've always felt there's so many broader applications, and I think people haven't been creative enough. By developing Fundrise, I just then saw so many people go into real estate, and it's like, well, there are other verticals to be done, and
There are
so
other
I
things,
I
right?
felt it was
Yeah.
a lot of like kind of me too, where it's like, well, what's the narrative? Why does it matter? And I think in reality, that type of passion shows of is the purpose behind the platform, not just sector, but the purpose behind it. So, I think real estate still presents opportunities. I think a lot of, you were talking about green building and other aspects. I think there's still a ways to go to push the envelope in real estate in terms of how the built environment is done. Agriculture obviously now is my big focus. Parallel to agriculture, where I think there's an opportunity, is also in forestry, and I think that's a great way to build as a good asset, but also as a natural resource to be preserved. I'm seeing more interest in alternative energy. It's something that we've even worked with farms who are planning to do solar on their farm. So I think ultimately, more decentralized local funding for alternative energy can go a long way. In small business, I feel like there's still a lot of gaps for small businesses that are looking for funding. I look at so many funding platforms, and it feels like there's a lot that are real estate, there's a lot that are tech startups, and that's pretty much it. And the reality is there's so many other enterprises that need the support. But where I tend to think the interest and demand is if you can back it with some sort of fixed asset, I think it always helps the viability of the business and the ability to take capital where you can be more confident that people can earn a return. And I think having a forward-facing business where they're engaged with their customers goes a long way. So I think, if you have an audience of people that want to support you, I think it's good to bring them in. I've always been interested in crowdfunding from the perspective of a different type of capital that thinks differently and is more aligned with the end project. That Fundrise was originally developed around me and my brother doing real estate development projects that were non-traditional and finding that traditional funding didn't fit it. So I've been on the entrepreneur side. I began on the entrepreneur side of
Yeah,
the
absolutely.
frustrations of trying to find funding that meets that is really aligned with you. And so all these platforms have had that as the theme of how do you have more of an alignment among the entrepreneur and the capital.
Yeah. So, what is your background
I
before
mean,
Fundrise?
so I started real estate development business with my brother right out of university. My father was in real estate development in Washington, D.C., so that's where I learned real estate just being around it. So it's like I have tons of experience in it, but actually for years, not as many, but it's just, you just grow up in it, so you're around it. So commercial real estate, I would say, applies across everything. It applies to Fundrise with the ability to build that business. It applies with Steward because at the end of the day, we're funding a lot of commercial real estate and use of land that is commercial real estate. For some reason, agriculture is not thought of as commercial real estate, but it certainly is, I would say, commercial real estate. And then my kind of interest and experience in raising money through alternative channels was built around that of being a real estate entrepreneur, trying to figure out different types of funding, and then just creating the platform to do it. If there's nothing out there that can serve what I need, let me help build the platform that does it. So I've my whole career has almost been in being an entrepreneur and finding alternative funding and building a platform for it. And a lot of my work with these farmers is just helping them think through funding options, not always just saying, use our funding. It was just, well, what's out there that you can weave together? We now even help some of the farmers apply for grants. We help them figure out, what's out there and what can we weave together. And I think that's what a lot of entrepreneurs struggle with, and, an advocate for them, helping them think about what's there from a kind of agnostic perspective. And then obviously finding that I think I can help them through our platform, but understanding that there are options out there that they just may not be familiar with.
Interesting. So, I mean, it's a nascent industry, crowdfunding. If you think about crowdfunding, all of it, not just regulation crowdfunding, how could it be made easier and more acceptable? It's definitely not mainstream.
It's still early, and that's why I think people have a short-term perspective. I mean, most of the regulations that define the world of securities and investment were written in 1933 and 1934, and that quieted down requirements for fundraising and for basically 80 years provided very few options. So we're really only in the first decade of loosening of those types of rules, broadening the opportunities and access to capital. And a lot of the rules and regulations are still challenging and problematic to utilize, and probably generally overly burdensome. So I think as these rules are streamlined and improved, it will become easier for platforms and entrepreneurs to use them, which will then expand the size of the market. I think the way to really drive growth in crowdfunding and drive adoption is through narrative storytelling. And so I find a lot of crowdfunding is pitching return. And that's fine, but I think if you're just pitching return, there's a lot of places that are pitching return, and it doesn't stand out. And so I find if you're bringing people in on an emotional narrative level, that takes someone who's not classifying themselves as someone who funds things to now funding a project. And I think to bring people mainstream, it has to go beyond the investment world. And I find that very few platforms speak to people beyond return.
Interesting. So what's the biggest challenge you've had building this? Go, Steward.
I mean, the biggest challenge was really developing the market. I mean, I started in 2016, 17. The idea of regenerative agriculture was very kind of unknown. I didn't grow up farming. My mother's family has been farming since the late 1800s, so I was one generation away from that, but it wasn't my personal background. And so understanding, who are these farmer customers? Where are they? How do I find them? What can they afford to pay? How can I structure a deal? Are they viable enterprises? And just validating that there is a customer who actually is a real business that can afford and raise capital. That took a few years, and then was just very pleasantly surprised of not only the viability of these businesses, but the growth in this sector of just all types of people entering this world and wanting to become farmers and really focused on ecology and taking care of the land. And then the second challenge was, well, who are the people who want to fund these farms? I mean, I personally funded the first portfolio because, you don't want to try to build two sides of the market at once. It's easier just to focus on one side. And then we took these farms to market over the past year as we launched the platform publicly. And I've been amazed by the breadth of people who are interested in funding these types of farms. I mean, most people have never funded a farm. I mean, I've almost never spoken to anyone who's funded a farm that wasn't their own family's farm. And so you're having to educate them about farming as an asset class, regenerative agriculture as a subset of that, of a different type of agriculture, and then, the stories of these farms. And so I think people, when I was saying the kind of narrative emotional level, they connect with these people. They've all bought food. They've all had that experience of being at a farmer's market or of hearing a farmer and understanding their passion and their interests. And so if you can connect with who that person is and their challenges and their struggles and the importance of the funding, the other aspects of collateral security sector, I think can be, they can get comfort on the fact that that's what we're focused on, and that's our goal, to make that simple and easy. So, now we have both sides of the market working, farms raising funding happening very quickly, and now it's growing the business. That part's easier to me. It's still a challenge, but you at least know that there's viability on both sides, whereas the first few years kind of was a lot of questions around who even is the market going to be.
And are these real collateralized loans? I mean, what happens if someone defaults?
Yes, so they're all secured loans. Some are secured by real property, so by mortgages or deed of trust on real estate. Some are secured by personal property, which basically means equipment, infrastructure, the business, so they're all secured. Some farms have better collateral than others, so that the interest rate depends on that. The 5% loans are the more secured, lower risk loans. The higher rates are businesses with less assets or collateral. But, that's our sole business of vetting farms, helping farms figure out what type of funding is needed in what amounts, helping them drive growth in their business through other means. And then we service all the loans ourselves. So if there is a challenge, we'll work with the farmer. Most of the times, if there's a challenge, it's a timing challenge, that there is an issue with a market or a customer or a crop. So it's not a fundamental problem. It's okay, I just need a little more time, or this customer dropped, so I'm now launching
Right.
this, or I'm waiting on a inspection for my grade A milk, which happened and COVID hit, and now it's 6 months later. Just the reality. So
Yeah.
rescheduling the payments is the most important. But if a farmer really can't do it anymore, they just need to give up and move on, then we would step in, and our first scenario would be to bring in another farmer, because we have a huge network of farmers who would love nothing more than to take over a operation that exists and is properly capitalized and is ready to
Interesting.
go. So that's our view. It's not a type of business where you can just passively just auction off the assets and expect to get recovery. You have to be engaged in it. And all we do is fund small to mid-sized regenerative farmers all day, every day. And so that expertise gives us confidence that if situations do arise where there are challenges, that we can step in and resolve them. And I mentioned that team member who's a farmer himself. I mean, he can literally show up on the farm if he has to and help them figure out the bottlenecks and the challenges that they're facing.
Oh, wow. So then what's your big, hairy, audacious goal?
I've came into this, with the view that there is a need for fundamental transformation in our agricultural system. The reason why I support regenerative agriculture is because of the importance of taking care of the land and people and health and wellness. All of those positive benefits are needed in part of our agricultural system. Instead, the system we have now has huge negative externalities with runoff, with low wages, with low quality food, with difficult access to food. So I think what we're trying to prove is there's a viable alternative of how you can do agriculture that is in alignment with ecosystems, that provides health and wellness and opportunity for people. And I think if that can be shown to be viable and it doesn't need to be subsidized and it can operate on its own, it can show that there is a different way and a different path forward. So many, I think, of the current modern challenges we face around societal, economic, health challenges find a root in agriculture, at least are impacted by agriculture in terms of climate or obesity, or exploitation, labor exploitation. And so it is one of those sectors that touches upon everything. And each story, each farm has their own impact, which is direct and tangible, which then becomes part of a broader movement. So I think we're in a historical kind of sea change of doing 100 years of industrial agriculture with really negative results, misguided, maybe by design or not, but the end result is not serving the interests of most people. And so our goal is to really lead the transition to an agricultural system that is for the benefit of many and that does provide opportunity for people.
Well, Dan, it's really interesting, and I'm so glad you could talk to me, and I wish you all the best success. It sounds like you're well on the way.
Well, thank you. Really nice to chat, and then I appreciate all the work that you've done also in building impact and focusing on storytelling and engaging people around funding things that are different. And I think more of that is always needed.
Thank you. That was Dan Miller, founder of Steward, an online investment platform raising funds for sustainable farmers. Everything about Steward and Dan checks a box for me. With Steward, Dan is serving an underrepresented group of people, farmers who can't get loans elsewhere. He's non-discriminating in accepting investors. You can invest for as little as $100. And he's keenly focused on making a difference in everything that he does. I'm looking forward to seeing how Steward grows. You can find out more about this episode on the show notes page at evepicker.com, or you can find other episodes you might have missed. Or you can show your support at patreon.com/rethink real estate, where you can learn about special opportunities for my friends and followers. A special thanks to David Allardyce for his excellent editing of this podcast and original music. And thanks to you for spending your time with me today. We'll talk again soon, but for now, this is Eve Picker signing off to go make some change.